Good morning, guys. Scoos from the Wise Wealth Discord. I'm back at you with another watch list. Just wanted to overview some of the stocks that I was looking at. Oops, typed in YouTube. Just wanted to overview some of the stocks, how we're looking at some of the sideways action with the SPY and QQQ. A lot of consolidation. There's nothing too concerning. No real trend going up. No real trend going down. We've been in this range since about March, actually, a little bit the end of February into March in the Qs. Then you can go to the SPY and kind of see the same similar thing. SPY does look a little bit more bearish, but it's also in a range if you just add some of the lines. So it's been continuing to stay in this range despite all the noise that's happening with wars and 10% correction, this and that. It doesn't look a little bit more toppy than what the Qs looks like right now. This is the daily, and then you go to the daily for the Qs. It looks a lot stronger, but nonetheless, I mean, still range situation. SPY did get down here to breaking overall market structure at 509 and maybe could continue to fall down coming towards this 500 and filling this gap right here that we have. The Qs, just sideways action. Anything above 447 is very bullish. Anything below 433 could start to see extended sell-off. 420, 415, somewhere around that area. And then we'll reevaluate, see how steep it will go. Is it going to be a 10% correction like this? Or is it just going to be a minor 3 to 5% pullback? As for right now, I think we're close to 3%. Yeah, 2.5%, and it's like with pre-market only 1.5%. So we're almost up 1% pre-market right now. IWM, it did start to lose a little bit of their market structure that they had going. So we'll see if it could start to recover, but it did start to look the most bearish out of all the indexes and ETFs, which is actually kind of common because small caps are usually a lot more volatile and they're going to be the ones that lag. So it's like, as you can see, obviously their all-time high is up here around 245, and like Qs and SPY, they're both at their all-time highs right now. So a lot of people's play this year is like, oh, IWM's going to catch up. They have this big breakout happening. But it's just showing a little bit of weakness right now as the market's digesting some of these moves that it's had. So we're just kind of wait. At least I am is just being patient, letting these levels play out. It's like if you get a huge weekly engulfing after this one, then yes, it's probably extended selling in small caps. But that's just prediction. I'm trying to react, not predict. So it's like my idea and thesis is if it goes above this, we're buying calls. If it goes below this, we're buying shorts. Same with IWM. If it continues to go lower, you need to watch these levels around the 190. There's a lot of liquidity. Right where it's at, 197, 198 is a huge level for it to hold. It loses that, then 190 could be in the cards, 188. We'll see. There's some pretty heavy volume right at the trend line that it ended up losing it. So I thought that was kind of significant for sure. We'll just have to wait and see how it plays out. Yields are ripping higher. That's never good for stocks. If it goes back up above 5% in any of them, it's going to be a pretty big deal. The 2-year is still up there pretty heavily. So that's never a good thing that puts a damper on stocks. The dollar ripping higher as well. You would like it to see resistance if you're a bull right around here, so it could stop, increasing, stop going up. Gold, that was Jimmy's trade that he had for a while. It was a nice, beautiful base that it had at like a 2020 all the way up to 2024, almost a 4-year base. Where it just kept touching it, denying, touching it, denying, touching it. Boom, it broke through, and it's like it hasn't really stopped since. You can see the RSI is getting a little overbought over here, but that breakthrough is huge, and that's exactly what we're looking for. So you see the resistance just kind of ranging here. Yes, this is the daily, so you can play a lot more plays in between them, but that's something kind of what we would want to see with the Qs, is that when it breaks above, it has that massive run following after. But commodities, not screaming, recession's coming, but some of the signs are there, like the inverted yield curve. Commodities are going up, such as gold and oil. Those are usually big, especially when wars are going on. So the Middle East happening is helping gold kind of rally, and then people like to go into safer assets um, when things like that happen, like an invasion and stuff like that. That did happen this weekend. Obviously, didn't affect many things. Um, Bitcoin did drop a decent amount, but we're still in just a very tight, beautiful range that it has here. So it's like you can't complain much. Like people aren't losing very much money, and everyone's expecting people to just start selling like out of nowhere for whatever reason. And it's just like pay attention to your levels. Don't get caught up in some of the noise that's happening, because a lot of these things just look like very very bullish setups. It's like yes, it's starting lower highs, lower lows on the daily, but this is just a classic bull flag and something that's really, been on a tear lately. And these moments are good. It brings the RSI down. It brings in more buyers when this comes in, and then eventually they're going to push it up. So nothing really too concerning right now. Apple did have a beautiful breakout last week. I bought calls to bring in this weekend. I was perfectly fine with losing everything. You can see it's down 0.5%, even though the market's almost up 1%. They had numbers that they released, and they missed by a certain amount. Let me actually bring up this thing. They missed by a certain amount in China. So shipments seen because China challenges. It's basically just explaining, Apple shipped 50.1 million units, down 9.6% from 55.4 million shipments the same period a year earlier. Among the top five smartphone brands, Apple recorded the sharpest year-on-year decline. I don't know what that says, but it says it's coming back strong from the large declines experienced over the past 2 years. Transition Transcend is becoming a stable presence in the top five with aggressive growth in international markets. So there's other competitions coming in. Samsung says right here regained the top spot in the first quarter after losing the crown to Apple last year. So that's not really great when it comes to looking forward to a stock and what we're looking at. But the TA does look really solid, so it'd be interesting to see how it plays out. Because as Jimmy was saying, like back in 23 when the 10% correction was ending, this break was something huge. So it's like it looks similar to exactly what they had going on over here. They had this falling wedge, and then it broke out, and eventually it just kept going and going and going. We'll see if Apple does the same thing and it does go up to 200. It will kind of show influence on the technical analysis side. Jimmy compared it to Google, and Google had like a big break. I don't have my chart set up for it. It looks kind of wonky right now. But this break has just kind of led to a meteoric rise from this little downtrend that it had. And it's just things like that where you're just waiting for a break, because 9 times out of 10 stocks are going to go up. So it's like be plotting these downtrends on good companies like Google, Amazon, all these big tech behemoths, and then just wait for that break above, because eventually it probably will. But when you start to see things like this is what gets scary because of how straight up it is. So it's like when it's consolidating, a lot of people are like, "Oh, short it, short it." But nothing here is the short unless you start to break below these trend lines. And that hasn't happened yet. AMD did break below their trend ultimately. So we'll see if it continues to show weakness. It's only up, barely even right now on a trending market. This level right here, though, is the point that you would expect to find support. So we'll see what happens here, but that big old top, I remember Jimmy saying that that wouldn't be a terrible short, and it's down a pretty significant amount since that top. Yeah, 28%, which is due. It was due for it. You look at, these gains that it's had since that cup and handle breakout that we posted a long time ago. It's just been straight up, and the RSI started getting up there a little bit, especially with this big spike. and it's healthy for the market. It's coming back down. It's going to find more buyers either here, and if it loses that, you got another support around 150. Loses that, and you have a major support at 130. So it's like right now you want to see this being held at like 163 because this is the previous like all-time high before it broke above that, started creating new all-time highs. So you can see there is definitely range here. Lots of liquidity in this part here. So if it does lose it, it has kind of a free fall where it can go down to 150. But just be careful shorting around the 163 level. Yeah, Google still looking nice in this beautiful uptrend. Higher highs, higher lows. Amazon, they just kind of keep inching up, man. It's kind of like meta. And it's like at some point you'd expect a rug pull, but you can't play your trading strategies based off a rug pull potentially happening. Because then you're just going to lose all your money riding it up to the top. And then when it finally does drop, you're not going to have any money to buy these dips. So it's like you want to be able to preserve your capital even in times like this where it's tempting to short, but there's nothing, screaming short yet. It could happen. I'm not, oblivious to the fact that this isn't very sustainable, in a short term time period. It's just up, 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 up. Eventually there's going to be a decent sell side, a week of 3% declines or 4% declines, and it's going to continue. It's not going to be one of those things like the Qs have been showing. We'll have a big old red candle, and then it won't have any follow through. The bears haven't had any follow through for a very long time. You'll have these big drops, and it would be followed by a big pop. So if you're not getting follow through on the bear side, it's not quite the time. And then all of these like stocks are really just consolidating. I know this shows that it was broken out of this wedge, but you take it into like more of a sideways action type situation. Bring this down. You have good support right there, and then you have good resistance up here. So it's like you have just straight sideways action. Nothing's really happening right now. People are losing their accounts, based off trying to play these things. Just be easy out there. One thing I did want to go over was I saw on Wing. It's just been a behemoth of a stock. I mean, you can see it's just going up, 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 up. And I don't really know much about how Wingstop operates and what their revenue is, but it seems kind of weird that they're like growing at this type of pace. They're still consolidating at the top, but potentially if the market does downturn, maybe that could be something you could look into shorting because the PE is just so high on the stock right now. But it's still just bull flagging like the rest of the stocks, like Microsoft and all of them, Meta. They just keep, sideways action all the way at the top. And you don't want to be shorting this yet. You don't want to wait for this break below 330, break above either 373 to go for 400. And that's just kind of a random one I went over. Other than that, I mean, there's not much else to go over. Because, like I said, most of it's sideways. IWM looks the weakest, in my opinion. But I wouldn't be too quick on shorts, and I wouldn't be too quick to go like super long in this range. I'm just kind of waiting. So as a swing trader, it's tough. In the last few months, I haven't been able to do my normal strategy, but sometimes you have to change. You can't do the same strategy every single time. So I've been scalping it a little bit more, going more down into 15 minutes an hourly. And at least we have a solid range to play levels off of because if this starts to go up and it gets to the 445, 447, then that might be a good denial point where you can get a short term, short on something and make some money. Because when this broke out and it started getting all bullish, a lot of people started getting very, very bullish that day. And then it got denied. And it's like it was right up at the top of these levels that it was starting to get smoked. It came right back down on Friday, and now you can see it pre-market. We're going right back up. You had a gap above, so we could see that filled. It'd be a pretty massive day for the Qs if that they fill that. And we just have to see if there's any follow through with it. But other than that, everything's looking solid. Microsoft just staying strong. Above, they break above. Now they're mounting these. We're going to see if they can continue to go higher. Microsoft gets above 430, goodbye, see you later. 500 coming. Maybe not 500, but like 450, something like that. But yeah, if you can't swing, then sometimes you just want to like bring down, you know, the time frames that you're looking at. You can start to see different plays in that spectrum. But swing trading, holding for a few days, I mean, the chop is going to be a two. You're not going to win very much or yield very much. Tesla's still just kind of struggling. Been a lot of like chop, a lot of volatility with Tesla lately. The floor right now is 160 and the ceiling is about 185. So we'll see if it starts to make its way up there. They cut about 10% of the workforce. Didn't seem like the stock market liked it, which I thought was weird. Because 9 times out of 10, if Apple or Microsoft does layoffs, it's a very bullish thing because you're helping margins. But with Tesla, they sell it off, and it's just a struggling stock. If you look at it in the long term, I don't think it's in a very bad spot. Is of how high up it went. It's like you zoom it out a little bit, and it's like, does this really look like a terrible stock? Not really. But when it comes to the massive gains that we've had in the stock market, the stock is continuing to go down and sideways. That's concerning. But also, you zoom out, and it's like it's had such a big run up that it's like this is kind of almost just a huge bull flag. But we'll see. I mean, that's kind of a stretch to think, if it gets above 250, then we can go up to 600 or something like that. But I wouldn't be so like bearish on Tesla. I know how bad their stock has performed through some of this stuff, but maybe for the longer term, this is a good place to be buying, shares to be accumulating and stuff. Because even if it breaks below, how much lower do you think it's going to go? What do you think the risk to reward is? I would say your reward is a lot higher than what your risk is at these levels, but that's just me. I'm not a financial advisor, nor do I expect you to take my words as the Bible and like to do everything I say. I just kind of want to give you my opinion on how I'm looking at things. But that's about it for the week, guys. We'll see what happens. Good luck to everyone, and let's have a wonderful week at Wisewell.